Going.
All right, we're good to go?
Yeah. You want to give me your phone?
Sure. Let me know when we're live.
Okay. You're live on YouTube, so let me go live now on Instagram. You can talk.
What's up, guys? Welcome back to our weekly live event. For you guys who don't know, I'm Pascal Corcus. I own a real estate investment fund. We invest in real estate, crypto, and green energy. I've been investing since I was 19 years old in the real estate game, so I have a lot to offer. Very, very late day, so if my words are not as clear or put together, I'm saying it's been a long day. Hannah,
Yes.
is the camera taking the laptop? I feel like it needs to be dropped or something.
Okay. Good call, boss.
Yeah, I'm like if I can't see the camera fully, that means the camera can't see me fully. You know, if you can't see my side view mirror, that means I can't see you. So really, are we live on everything?
Yeah. Yeah.
All right. So what's up, guys? Great to see everybody back here. Some really awesome news. Kathy Woods is moving her fund, ARK Invest, from New York down to St. Petersburg, Florida. She's buying. Her business is moving down there, and it's actually right by a whole bunch of properties that just purchased. So it's pretty sick. Yeah, it's awesome. I was joking with Kent and the real estate agent that was able to get me all the deals I was looking for. And I was telling Kent, I was like, Kent, I think she's watching me on Instagram. She's following my moves. He's like, yeah, she's watching on YouTube right now. So that's actually really awesome. It's really awesome to see that a lot of people are seeing the benefits of being down here in Florida as much as I'm seeing it. I definitely see that there's going to be a huge trend over the next 15 plus years where people are going to be coming down, and it's going to be a huge hub. The Tampa market is going to be a huge hub, a huge financial hub, and I think it's going to be especially one where we're going to have a lot of technology, another tech hub like the Tampa Bay, we're going to be like, Tokyo Bay, like San Francisco Bay, and I also think that's going to have a lot of finance, like New York City. A lot of investment firms are going to come down here. Lots of benefits, obviously, income tax. There isn't a state income tax, so that's a huge benefit. But the freedom to be able to move around and do what you need to do without the government, state constricting you too much is definitely helping our businesses flourish. So New York, California, Canada, you guys are welcome to Florida. Just remember, keep your laws, your thinking that shut down your states and countries. Keep that over there. But bring everything else. You're welcome. You're welcome to come. So it's really good times. I'm really excited about that art coming down here. And especially since I'm owning the buildings, multiple buildings surrounding that area that they're moving from. Or moving to. So guys, at this time, you guys get the opportunity to basically ask me whatever questions you want to ask regarding taxes, insurance, mortgages, investing, real estate investing, crypto investing, green energy, and how it can affect your tax returns and strategy. Normally my clients pay about $500 for the hour, and you guys get it for free. So any questions you have, more than happy to help and answer them. All right. Do we have any questions so far?
No.
All right. Cool. Well, hopefully this is going to be a short night so I can go to bed. Alrighty. So what's going on so far? Right now we're working on the crypto fund. and we've had multiple meetings with different companies to pull together each company's strengths to build this large real estate, crypto investing fund. So we're looking at building a large crypto mining operation. And this is an opportunity where people can invest in the fund and own their own miners, have it run professionally, and get tax write-offs for that investment. So we're working on potentially a minimum investment of $65,000. That's going to give you about $130,000 worth of miners. You'll be able to bonus depreciate that all year one, so you get $130,000 off of your earned income for that mining business. From there, from the pro forma, it's looking like it's going to be very good regarding the returns. Can't really talk about it because we have to have interested parties sign NDA for that information, but it's looking very good.
You got a question on there from Linda. If you can scroll
Linda.
Scroll up because she did it in the comment section.
I see that. And I think sometimes you can pin it as well. So Linda says, rents are going up like crazy, but food costs are expected to increase by 40%. How does this work? So Linda, from a high level, it's pretty simple. It's a thing called inflation. When you print more money, the dollars that you own are worth less. Because if I have, let's just say $100 of Pascal bucks, and it can buy a certain amount of goods. If I double my production of Pascal bucks, but I don't increase my capacity at all, I don't increase my value at all, then that means my Pascal bucks can't buy double the amount of items. It can buy the same amount of items, but now every item that I buy, I have to give them more Pascal bucks for it. So in that same sense, when the government prints a lot of money, all it does is it inflates the cost.
I'm reading as you're answering.
It inflates the cost of all the items that you're buying. So you're not really, when they give everybody more money, it doesn't actually help people in the long term. What it does is just gives them more money that they literally find out later that's worth less. So now, since all the costs of all the goods across the world are going up, farmers are spending more money to make the crop. So because it costs them more to give you the finished product, it costs them 40% more. It's going to cost you 40% more to buy the same product. So yes, it's going up. And we're going to go through a hyperinflationary period, and we're going to go from there to stagflation.
And her comment is, if wages increase, how can people afford higher rent? If there's higher rents, how do people afford it if wages don't increase at the same rate?
But right, how do people afford the higher rents? And
then she goes back.
That's what they're doing. Like if you actually look at the World Economic Forum and you study what their plans are, they say in 10 years, no one will own anything and everyone's going to be happier. The reality is in 10 years, no one's going to be able to afford anything. And they're going to be stuck what they're telling us, the people in charge, that in 10 years, no one's going to be able, if you read between the lines, what they're saying is in 10 years, no one's going to be able to afford anything. Not by choice, but they're going to be forced to only be able to rent anything that they're interested in because they're not going to be able to afford it. So at that point, that's what's going to happen. There's going to be a huge group of people that are going to be, it's going to be very, very obvious that a huge amount of people are slaves. Now, I've said that for a long time. In this world, with the current fiat currency, you are just a slave because these dollars are getting is not truly money. It's a currency, but it's not money. So when you have them and every dollar you have is a debt, all you have is even if you make a lot of money and you hold dollars, all you're doing is holding a whole lot of debt. So when someone says, "Oh, I want to have a whole bunch of cash in my account," I think that doesn't make any sense because all you're doing is a whole bunch of debt. It's the same thing as having a loan because the dollar, it has a 3% minimum interest rate annually, and how you pay that interest is called inflation. So yes, you are right. It's going to be very hard to survive for a lot of people if you are not strategically planning to be able to survive that. You're going to become a slave. Now, you're not going to be shackled. What's going to happen with you is you're going to be a nurse, and you're going to make $60,000 a year, or 70 or 80,000 with inflation, whatever that number is. But whatever the number is, you're going to make just enough money to not drown. That's what's going to happen. And for any of those that are making less than that, they're going to get subsidies by the government. But if you want that money, you're going to have to comply. You have to take the shots we tell you to take. You're going to have to live the way you live. And hey, we'll give you Section 8 housing. But women, you cannot have a man in your life. You have to stay single. You have to be a single mother. Because if there's a man, a boyfriend in the house, we're not going to give you the voucher. So you're going to have this form of slavery where they're going to tell you how to live and do what you want, and you're going to have to comply. In returning for you to comply, they'll give you stuff. They're going to give you more of this fiat currency that's worthless in exchange for your obedience, aka modern slavery.
Since everything is going up for inflation, should the people get raises due to the rise of cost of living?
So what's going to happen is we're going to have this thing called stagflation. We're going to have hyperinflation, then it goes into stagflation, which means...
Check out that video. It's on YouTube.
So what's going to happen is eventually people cannot afford, right? People will not be able to afford to buy stuff. So less items will be sold, and each item sold will be sold for a higher price. Eventually, what will happen is less people will be needed to work because less items are being produced. So the same dollar amount of revenue is being generated, but less people are working and less people are getting stuff, which is called stagflation. That's not healthy. In a healthy market, we wouldn't have given away all this money. We would have let things run out a little bit more in a healthy pattern, in the sense of, if you're sick, it's good sometimes to get sick and build up your natural strength and immunity in your body. And then when you come back, you're going to come back stronger. Because we didn't do that, we have a very weak economic system. And this economic system is going to have a lot of people suffer because it is not strong enough to keep up. Now, their answer is going to be more drugs, aka more dollars printed and given out, which is just going to keep on giving the American people, again, drugging them up more, but not truly solving the problem. To truly solve the problem, we have to increase our productive capacity. We have to produce something of value. We have to do something good in the economy that benefits other people. Printing more money doesn't really benefit anybody. It just drugs you up. Now, if you are working and producing something and providing a needed item to the country, to the world, then there's a value. And that value is going to create more jobs, more benefits, and going to help have the economy recover in a healthy manner. So we have to get that to work. We have to start producing something of value that people are going to benefit from. Now, if we were giving away money and they said, hey, we're going to give you money and we're not going to charge you to go to school as long as you're going to school for these jobs that are very needed, that would make a lot of sense. Don't give people a crazy amount of debt for jobs we don't need in this country. Hey, we're going to let you go to school for free, but if you go for the jobs that we need plumbers, we need electricians, we need HVAC guys, we need people to put down all these new roads, because they have this plan for infrastructure in this country. The problem is we don't have enough people to actually do it, execute the plan. So it's really a plan that doesn't have much legs. To the point, they should be giving away schooling for the jobs that are needed, have people if you're going to give them free money, give them money while they're going to school for something we need, not for nothing. Where if you understand this, if you're sitting at home and doing nothing for a year, 2 years, 3 years, 4 years, it's not like you can get back into the job force and be a productive member. Our technology changes quickly in a year, in months. So if they're gone for a full year, they're going to miss out on all these opportunities to learn the new technology and to be able to be a productive member of the team. So they're going to have a lot of training to get back into being a productive member. At the same time, when you're working with people, if you're stuck at home all the time, you kind of lose that skill to socialize with people. And that also is necessary to have a productive office. So it's going to cause a lot of problems if we keep up with what we're doing. It already has major problems that's going to cause, where we're going to see ripples for years to come, but it's going to get even worse.
Moving on now to real estate. Ramel from YouTube says, what do you think about buying land and building a house in South California?
Say that again.
What do you think about buying land and building a house in South California?
If you could buy land and build a house for at or below current market value for other homes that are for sale, then I think it's a good idea, because that means you have a brand new house in good condition that is for the same price or less than what a current home is for sale that is built years ago. That's a good idea. You're going to save yourself for about 10, 15 years of headache if it's built properly. So again, if the numbers say it's a good idea, then it's a good idea.
We have
to
a
go
question.
back to Linda, because I think she added some things. If you don't increase at the same rate, then she said, I watch this. This is John Williams a lot on YouTube, and that's what he says. So John is right. Me and John are friends. We talk every once in a while, and he actually moved to Florida. Me and him see the same problems. The reality is, who is currently leading our country isn't a good leader. Like, they're making really bad decisions that temporarily are good, but are systemically breaking down our society, in the sense of the common sense of, if you do something good, you should get a good result from it. But right now they're creating this, okay, if you do something good, if it's not what we want, we're going to punish you. And they're really priming everyone to be more obedient, to just agree with whatever they want. So it's a problem. But yeah, I agree with John.
Really quick, someone asked here on Instagram, refi or HELOC?
You're welcome, Cook. Refi or HELOC, I would do both. Cash out refi to the right LTV, and it depends on an individual. So when I'm doing a review, I'll see maybe sometimes it's 70%, sometimes it's 80% LTV. And then from there, we would get a home equity line of credit for that property, if it's a primary residence, to get the rest of the money. So it would be 100% loan to value on the property. And normally, if it's done properly, your mortgage, taxes, and insurance is the same amount that you would be paying rent. Now, you still own the home, so you get all the appreciation as the property goes up, but you're paying money like it's rent. So you're renting to yourself. And then you're using all that excess cash to invest and get a good return on your investment. If it's done properly, it can be very profitable. Because if you're a sub 3 on your first mortgage, and then you're sub 6 on your second HELOC, then you're going to do really well.
Follow-up question with that is, can you explain why it's better to renovate a multifamily all at once?
So it depends what you're fixing. If you're fixing the sewer system, obviously everyone's going to be affected. You're going to have to demo the floor. So it's a good idea to do it all at once. I'll give you an example. I have a 7-unit property. It's a duplex, triplex, and duplex. So on this duplex, I'm doing the whole building at the same time. I'm not doing all 7 units at the same time, all 3 buildings. I'm just doing that one building. All the plumbing, all the electrical, all the AC, new framing, insulation, drywall, kitchens, bathrooms, roof, windows, doors. Now, everything is done on this property I took it from a 1950s build. It's going to be a 2021, basically fully remodeled. I don't have to worry about any problems for 15 years. Again, if you're doing sewers, you're not going to be able to get around from busting up the floor. And if you don't want to, one, have trouble with your tenants, if you can do certain upgrades that will not affect your tenant, then you can do one unit at a time or one section at a time. It really depends on the specifics of what you're trying to do. If it's just AC units, yeah, you can just do one at a time.
We have a question here on YouTube, and they ask, do you recommend buying rental property at this really hot real estate market?
So this is the crazy part, right? In 2019, I was being very careful on what I'm buying. And I was hesitant on what's to come. Now we're in 2021. I'm still careful on what I'm buying and making sure the numbers work, but I'm not as conservative because when they printed trillions of dollars, the money has to go somewhere. And it's going to eventually go to hard assets. And one being housing, you can't get around living somewhere. You got two options: live somewhere or live on the street. You're going to live somewhere. The fact is, right now, with what happened in this printing and the low interest rates, and I don't see interest rates going back to 5, 6, 7%. I think they're going to have to stay sub 4s, which means the market for the pricing for housing is going to stay high. The only reason the housing market's going to crash is if we have a financial crisis that affects the banking sector where you cannot get loans. Only reason 2008 happened the way it did. It's not because there's a bunch of homes that went to market. It's because a bunch of homes went to market and people couldn't get loans. So right now, all of the indicators does not point on housing prices going down. Even if we have a flood of homes coming because of foreclosures, that would not make it go down. That would reduce the amount of increase that we're having. And if we did go down in 2 years, because it's going to take at least 2 years for those homes to hit the market, all you're doing is bringing back it to the price of what it is today. So in 2023, we have a flood of homes, though the price of homes is going to drop down to 2021 prices. So if you can get a property now in a great location, likely that property is not going to be available in 2023. So when I'm buying diamond properties, diamond locations, I'm buying that location. I'm buying that. And if the market crashes, usually that seller isn't going to sell the property for 10, 20, 30 years. So that's where it doesn't matter so much, because I'm buying a great property that has a great 10, 15-year outlook. That's what I'm looking at. So to finalize what I'm trying to say is run your numbers, because I'm buying properties right now that are good deals based off of what the rent is. If I remodel it, and based off of the remodeled rent, I'm making a great spread. I'm burring apartment complexes.
And her follow-up question, or her, I can't see from here. Follow-up question is, do you recommend buying in the same state as you live in, or is it okay to buy in a different state?
So it depends where you live. If you are not in a state that is landlord friendly, that has upside potential, then no. And even if you lived, say, in Florida, Texas, or Arizona, which I'm very bullish on those 3 states, there are certain parts of that state that I would say don't buy in those parts. Because just because the state is good doesn't mean the area you bought in, that city, is good. Just because that city is good doesn't mean the area you bought in is good. So don't feel like I can buy any property and win. It's like saying I could buy any cryptocurrency and I'm going to do fine. Maybe during a bull run, everything will go up. But as Warren Buffett says, when the tide rolls out, you'll find out who's naked. Basically, when the bull run stops, you're going to find out who's going to lose, who's losing their money, and who truly isn't a good investor. Because when times are good, you're not learning anything. Everybody's making money. But when times are tough, that truly shows you who has the skills, who has the business acumen that can really make it and survive, because that's truly where you make a lot of your money. And that's why everyone's waiting for the market to crash, because they're hoping that they can buy it cheap, and that's where a lot of the money's made. But again, right now, without a banking crisis that affects mortgages, I don't see the prices dropping like that. I see prices going up aggressively over the next 10 years.
And which area in Florida won't you buy in?
There are certain like lower income areas that do not have a lot of upside potential, or have very little upside potential. So because of how depressed the market is, it's hard for me to change a whole city, right? You can go, I thought I can create when I was younger, I thought I can create the wave and run with a smaller wave if there is any wave at all. But what I realized is it's really hard to create that wave of change in an area. So now I go in an area that either has an extremely large amount of benefits of change coming, or I go with a current wave and I help work with the wave of change. So if there's a lot of other investors doing significant value adds and bumping them up, and there's people bringing restaurants and tourist events and activities for families, then I'm going to that area and I'm helping it continue. Some area that's partially gentrified and continue gentrification. So for example, in St. Pete, I'm investing in St. Pete, right where I mentioned Kathy Woods just brought her business right by where a lot of my buildings are. But there's certain areas I won't buy in St. Pete. It's not like St. Pete's a winner and done. No, there's certain parts of St. Pete I won't buy in because, one, the price is too high, the rents are low compared to the price and the headache that's accounted for, and the change, the appreciation is not going to come for a long time in that section. So I phase in to where if I think an area is growing, there's a phase in and a phase out period.
From YouTube here, someone asked, do you have any recommendations in Texas? You go there often. Do you have any recommendations in Texas?
It really depends what you're looking for. Like recommendations for what? Single family, multifamily, commercial, self-storage, mobile homes. Like there's a lot of things you can invest in. Agriculture. What I want to say is if you're talking about residential or light commercial small plazas, because I really am bullish on small plazas as well.
She said single family. Or sorry.
Huh?
I don't know. This person said single family. They said single family.
So if you're just single family to live in, it's different than single family to rent, different from Airbnb.
I believe it's rental. It's for rental.
So I would focus on secondary and tertiary markets regarding major metros in Florida, Texas, Arizona, North Carolina, South Carolina, South Dakota, some of these Tennessee, some areas. There's other potential areas too, but secondary, tertiary markets, they have less waves as well. The cyclicality of pricing is less in those areas as well.
Someone asked, where have you been?
I've been right here.
On the Instagram there.
Every 2 weeks I come live on IG and YouTube. So here I am. I've been opening up. My fund has been expanding rapidly. Lots of people want to invest with us. So it's just a lot of work to make sure that I'm being a good servant to all of my investors. I want to make sure that they're being taken care of. So, we're still producing stuff for social, not as much as I would like. We are working on expanding that and doing more. We do want to provide as much value as possible to you guys. But just working, man, just putting in a lot of work. I'm running 5 different companies. So, and I'm the chief chief strategist in all my companies as well. So, I'm that visionary that everybody needs to talk to. So it's just
that nerd
tough.
power.
Yeah.
A question here on Instagram, if you want to look at it. Does Seminole Heights in Tampa?
Tampa is a hot area to buy. where you are on that street will be what the dollar per square foot will justify for that property, the type of property, excuse me, if you can Airbnb, and so there's all these factors that determine the price, and then what is it worth pre-rental, post-rental. So you, even though it's hot, you could overpay, or you could get a good deal. It depends on the street, what you can do with it, the condition, so a lot of factors. But if you're asking me, is it hot? Yeah, it's hot.
Question here on Instagram. How do you get into mobile home investing? Is the mortgage process the same? We have a YouTube video on that, and also go ahead.
Yeah, so we have a YouTube video on that, guys. Pascal Corpus on YouTube, bunch of different videos on the ideas. I go in detail on mobile home parks, how you can get financing, how financing normally works, the types of ways you can invest in mobile homes, the different types of mobile homes and how they each make money differently. Go and it's probably what I was like 20 minutes.
Yeah.
So it's a lot of content. Watch the whole thing, because you definitely do not want to invest in anything without you understanding how it works, because that is the number one reason why people lose their money.
But really quick, just to is the mortgage process the same for mobile home? Yes or no?
It is the same as a commercial loan than for a commercial mobile home park. If you're talking about is the mortgage process to buy a mobile home to live in the same as a house, yes. So if you're talking about house, mobile home, yes. Multifamily complex, mobile home complex, yes. There is different things that you want to look at in the sense of things that could go wrong, because each have different moving parts. In the video, I talk about that.
Question here from Instagram. Do you recommend starting a development company to own all properties if I wanted to start building multifamily homes, storage units, etc., or have it all under my own name? Do you recommend starting a development company to
No
own
to
all of
both.
it?
No to both. One, it should not be in your name. Two, it should not be all under one company. That's wrong. And if you guys are talking about investing $100,000, you definitely need to get advice. I have a company. You can set up a consultation call. But if you're going to invest $100,000 or even $10,000, you don't want to do that and expose yourself to a lot of risk. Especially some people I'm talking to, they have millions of dollars that they're investing. And the way they set things up is scary, because in that example, if you have a development company, you have all of your assets in there, that's just as bad as having all the property in your personal name.
Why?
Because for example,
you're putting all your eggs in one basket, kind of
basically you put all your eggs in one basket. So like, for example, and there's different type of ownership. There's active ownership and there's passive ownership, also should be in separate entities. There's active businesses and passive businesses, different entities. So I have a business that owns my building, another business that is working in the building, and then I have other businesses that own the interest in those businesses. So just that example, I have at least 4 businesses, 4 LLCs that function differently. That some are treated as 1120S, some different treated as 1065, depending on their function. So, it's not all black and white.
We have a question here on
No
Instagram.
questions.
Yeah, with the COVID mandates in California rising, should people watch out for new properties? With people moving out?
With the COVID mandate and with the COVID mandate in California, should
people watch out for new properties with people moving out?
With COVID mandates in California rising, should people watch out for new properties with people moving out? So this is what's happening. There isn't enough properties to go around anywhere in this country. So there's 3 million homes short. What's happening, the chief economist for Fannie Mae, we met with him this summer in Belize. Very funny guy, right? You think an economist is not funny? Super funny guy. Really, really nice. So he's very big into research and statistics, and I love that because I'm a numbers guy. Like, tell me statistics, and that's really what I want to hear. So this is what they found. What they were seeing is, on the very top, A-class properties, there was A-class properties available in New York. But what happened is people were cycling through. So the people that wanted to go to an A class but wanted to make it a little bit more affordable, the price went down a little bit. So they got in there. And then people that wanted to get into B class cycled in. So it wasn't like a rush of people are leaving California, which is true. But what's happening is people are playing musical chairs. The people that wanted a nicer spot there are grabbing it right away. And since there's still not enough housing, people are just taking what they can get. So it's giving opportunities to get things up at a reduced price and a little bit of a discount or a incentive to move into a property. But that is still not, and there's not enough people leaving to create a huge drop. It's not like Detroit, right? Detroit left because the businesses left, the jobs left. So as long as California still has jobs, and it still has a lot of jobs, it's going to be fine. Now, if they continue moving and we're now 2-3 years down the line and they basically killed all the restaurants and killed all these different businesses and they're allowing looting to happen, so CVS leaves and Walgreens leaves, then we're talking about, okay, it's going to become a significant problem. But at that point, you shouldn't even want to live there. You probably want to dip out because it's going to be a problem. So, but I think by that point, a Republican is going to take over office because the people are just going to be so unsatisfied unless they continue getting brainwashed and to believe that what they've been doing is good and that the problems are because of, Republicans, and then they buy that ideology, so they're going to continue doing more of that, thinking it's going to get better. Same idea of printing more money. They keep thinking that printing more money is going to make things better. It's not going to make things better. It's going to kick it down the road and make it even worse when it comes. So that's basically what California is doing. Kicking it down the road and making it worse when it comes.
Edison asks, I want to set up a consultation call. Where can I set up the appointment?
DM me and someone on my team will get back with you.
What is a 1065?
So the 1065 is a partnership tax return. I'm going to give you a real quick breakdown. LLC is how you're treated as an entity legally. That does not mean anything for taxes. You can be an LLC and be a Schedule C, which is on your personal 1040. You could be a 1065, which is a partnership, or an 1120S. And in some situations, even though it's not advisable, you can be 1120, standard, as an LLC. As an Inc., you can be a Schedule C, or you can be a 1120S, which is not really advisable, doesn't make a lot of sense, or a 1120. You can be an LLP, which is standard to be a 1065. Sometimes you have to use LLPs on Schedule Cs on your 1040. Also, doesn't really make sense, but possible. So 1065 is a partnership tax return.
Awesome. And then Edison asks, would you recommend building a new multifamily for it to be more affordable?
Building a multifamily home versus investing in already built one. Depends. You have to do a cost basis analysis, right? Like if you're going to buy a piece of land and build a multi-unit property, what's it going to cost you? In the same neighborhood where there's a current one available, and if you remodel that one, what's it going to cost you? Now you figured out the cost, then you can figure out, well, is insurance going to be cheaper on the new building compared to this one? Certain things like that, right? Now, the next point is it's usually really hard to get a multi-unit, build a new multi-unit in a really good area. You have to buy what's existing there. That's what I've seen. 2, having an existing multi-unit in that same area, it's kind of difficult to get a brand new one built, right? Like usually they don't like that. They want to build single family homes. They say they want to have more units being built. They say they want to make housing available to people, but the reality is they're just talking out of both sides of their mouth. They say that, but they don't do it. Because we've given them an opportunity to say, hey, there's a fourplex here, let us build another fourplex, and the city says, no, we want a single family home. Well, how are we going to make affordable housing when the dirt costs $350,000, When we build a single family home, the rule is normally 3 times of whatever the dirt is. So if the dirt's $350,000, that means you're going to be building a house for $1,050,000. How's that affordable housing? Now, if the dirt's $350,000 and you let me build a fourplex, I can try to build one for $1,050,000 or $1,001,000, $1,002,000. Divide that by 4, that's $300,000 a door. Now we could be renting out 3-bed, 2-baths, 2-bed, 2-baths at $2,000 a month, compared to obviously having a $1,050,000 house that no one's really renting that. They're going to be living in it in their home, which rentable value for something like that is like $8,000 a month, $7,000 a month. Not very affordable. So they're not logical. They say one thing, but they don't actually practice what they're saying. They don't actually help you accomplish that goal. Unfortunate.
Okay. Someone says here, one, I use my FHA loan. Can I do a 3 to 5% conventional on my second property that I'll be moving into?
Repeat the question.
One, I use my FHA loan. Can I do 3 to 5% conventional on my second property that I'll be moving into? Or maybe they're saying when I use my FHA loan?
So when you use your FHA loan, normally that's so an FHA loan means it's your primary residence. And there is with FHA loans, you have the opportunity to only put down 3.5%. So yes, when you buy a property and you can put down 3.5%, you can move in the home and live in it. Now, if you're talking about buying a second property, can you buy a second property also with 3.5%? Normally, the answer is no. To do another FHA loan, it has to be 3 years after the first. And normally, they don't allow you to keep 2 FHA loans. It's possible, but it's rare. What normally happens is you will refinance the first into a conventional loan because you should have enough equity at this point. At that point, you can get an FHA loan on your next home. Not optimal strategy. There is better ways to do it, but it is possible to do it the way I just mentioned.
Awesome. And how do you not pay any taxes from crypto profits?
So with your crypto profits, you can offset the taxes by losses or investment credits in another investment. So we have a green energy fund. So if you invest $100,000 into this fund, you can get $200,000 off of your earned income. This is based off of IRS rules. So if you made $100,000 profit, you invested $50,000 into this green energy fund, you could get $100,000 off of your income. You get it? Same thing with our crypto mining fund. With our crypto mining fund, you invest $65,000. With the current plan we're working on, you can get $130,000 worth of mining equipment, and you would be able to get $130,000 off of your income. This way you can basically roll. It's not a actual 1031 exchange, but it would function similarly where your profits over here are being washed by your losses or your write-offs in a separate business. And that's what I do for my clients through my tax company, as we strategize how we can set up all these different moving parts and all these different LLCs where I made a bunch of money in this LLC. How can I find a way to invest so I can get a tax write-off from this other LLC to wash the profit of this LLC? And it just becomes a game of constantly reinvesting in different tax strategies. That's how when Trump says he only paid $750 in taxes, he didn't avoid paying taxes. What he did is when he was making money over here, he invested it into another business that that offers tax credits that the government is offering. So, for example, Trump does a lot of construction. Well, you can do construction into a low-income housing. If you do low-income housing construction, you get lots of tax credits from the government. The government is going to give you basically a write-off, but actually it's not a write-off, it's even better. It's a tax credit. So if you owed $1 million, they can give you $1 million tax credit so you don't owe them anything because you did them a favor. You helped the country by providing low-income housing. And because low-income housing is less profitable, they're giving you an incentive to do it. Hey, we know you're going to make less money, but in return, we're going to give you tax credits to help justify this decision. So it's a way where if a person's paying a low tax bill and they're doing it ethically, they're providing lots of value to the country. Jobs, housing, different construction, different things that they need for buildings, or research and development. You're coming up with a new drug, you're building a new app, you're spending money on something that's going to be benefiting society, either immediately or over time.
Bass, you should do more lives more often. Is that possible?
So again, I'm running 5 different companies. I'm running an investment firm, and I have a lot of clients. Normally it's $500 for the hour if you're not a client. If you are a client, it's $300 an hour, and I just don't have that many hours in a day. Like,
if you're a friend buying Chipotle, just joking.
Yeah.
Okay.
I'll slide.
Let's do speed round because we're at 10:59. So answer quickly and then we're done. Here we go. Question here is, what would be the best way to borrow money against my home that I own 100%?
Refinance, cash out refi, 70-80% LTV.
That they own 100%, like perhaps they don't owe anything anymore?
That's what I'm saying, and I give them the answer.
Okay, I guess they understand. And then next question, what should 401k be rolled into to invest in real estate?
You can do a self-directed EQRP. DM me if you want more information on that. A self-directed EQRP will give you the opportunity to invest into real estate without getting hit with that hidden tax. Because if you roll it into an IRA and you invest it in real estate that has debt on it, you're going to be hit with a hidden tax, and you're going to be very unhappy when that tax comes. So DM me and I'll give you more information on the EQRPs.
And then question here is, what's your opinion on interest-only payments with a CAVOR refinance?
So interest-only payments, as long as they're not negative AM, it's fine. Now, that doesn't mean just because they're interest-only, you can overpay for a property. At the end of the day, a loan is a tool. That does not mean that property is a good property to buy or not. So just because you got a great loan, which makes it easier for you to get this property, doesn't mean you should buy that property. But yeah, interest only, that is not a negative AM, at a fair interest rate is a good idea.
And last 2 questions here, they go together. Would you do a straight refi or cash out refi right now, and how much cash is good to do?
How much cash is good?
$1 million.
Not even. I said this a long time. I said, if you gave me a $10 billion loan, I would take it. If you gave me a good interest rate, have as much money as possible. The more you have, the more you can do. Because I'm telling you, the second you have a lot of money, whatever that you think that a lot of money is, you're going to realize you're not going to do much with it. And you're like, man, if I had more money, I could do this. So what do? Cash out refi my house to 70 to 80% to get a low interest rate, fixed 30-year mortgage. Then I get a home equity line of credit for the other 20 to 30%. I'm at 100% loan to value. That's under 6% usually. And now I take all the excess cash on that refinance and I invest it in assets that I get 15+% return. That's what I do. And I'm making from 3 to 15 is 12% on that spread. And from 6 to 15 is a 9% spread on that money. So basically that's how I'm getting my money to work for me. That equity that's in your home is trapped. It's not doing anything for you. If you have a $100,000 home and you have no loan on it, the home could go up, let's just say a 5% appreciation a year. You made $5,000 in appreciation. If you had a $100,000 home with a $100,000 loan, that same home is only getting 5% appreciation, $5,000 a year. Now, if you took a loan out on that property for, let's just say 70% loan to value at under 3%, that $70,000 is also, if you're investing properly, put out in the market, returning a 15% IRR. Now you're making 15% annualized on your money that cost you 3% to borrow. You're making 12% on that money. The difference between your income and your expense, for your profit and your cost, that 12% is money working for you. Now you're not working for your money. If you say, I agree with Robert Kiyosaki, and you say, I don't want a loan on my house, then you don't agree with Robert Kiyosaki. You don't agree with the concept of having your money work for you. It's not to be, it's just period. It's not to be hurtful. It's just the facts. You got to accept that. I also thought pay off your home when I started. And then as I studied more and more and more and understood the financial system, it made no sense. Why would I? It really doesn't add up. Unless I'm like 65, 70 years old, then I can be like, all right, pay off your house, but you shouldn't pay off anything else. Everything else should be levered with a specific strategy in order, right? So there is strategy is important.
Yeah, someone asked, just to follow up with that, if I owe 164 on my house and it's worth about 685, would you recommend paying off the mortgage?
No, opposite, man. Are you not listening to me? What are you guys not listening? Do a cash out refi. Get all the cash out. Now you're gonna, I have a home that's worth about a little bit more than that, right? I'm gonna do a cash out refi to be 100% loan to value. That means in my scenario, I'm gonna walk with $550,000 if that was you. If I was, we trade places. 550 is what I would walk with. 550, my clients earn 15% IRR. That's like the worst one any of my investments have made. Again, previous history does not mean future performance, but a lot of my stuff performing are 30% performing. So if you're borrowing at 3 and you're making 15, then money working for you. 12% is the spread on that 50,000. That's like $75,000 a year, so somewhere close to that. Yeah, on 55, 50, 12% is roughly, $65,000 a year. Money's working for you. You're not working for that money. That's the key. Expand, expand, expand. The amount of money that's working for you, that you're not working for that money. And that's how you become free.
Dope. Nico says lunch on me at the Brazilian steakhouse next week.
Am I in Texas next week? He might know my schedule better than I do. I don't even know.
Probably.
I just say, yo, where do I go? And I just show up.
Cool. All right, that's it. So many good questions.
See you guys next time. God bless. Did we